Hello dear students, today we will be discussing about the Union Bank of India, which means the Reserve Bank of India. Every country in this world has a central bank. A central bank is an institution that regulates the banks of a country and also is responsible for the monetary policy of the country. Now what is the monetary policy? Monetary policy is a set of policies that are in regard with the currency. Anything that has to do with currency, the amount of currency within the country, the shape of the currency, the standardized material of the currency, everything is a decision taken by the central bank of every country. Our central bank is the Reserve Bank of India. It was established in 1935 and also was nationalized in the year 1949. Now, in my opinion, the Reserve Bank of India is probably the best bank in the world. Now, why do I say it? It is because when we went through the phase of COVID, where the economy was in a state of lockdown, there was no production taking place, which meant that inflation rates were soaring all around the world. Now, what American banks did in these times is they started printing currency left, right, and center without taking into account the inflation this abnormal printing of currency may take place. So, since the American Union Bank failed to foresee the future and printed a lot of currency, the entire world was in a state of inflating rates. It was so worse in certain countries like UK, where the inflation had gone up to 40%. That is a very disastrous number for any economy. So why it is in this time that RBI proved its mettle. It is this organization, along with the help from the government of India, which shielded us from the severe repercussions of the global economy. They even after the COVID-19 incident, there were two successive wars. And as we all know, whenever there is a state of war, the prices of fuel always tend to increase. Now, you might have seen, yes, the price of fuel did increase during the COVID era. But now, even though the world has seen two wars, there is not much increase in the price of fuel and food. Now, the credit of this goes to the Reserve Bank of India and also the government of India. They, with their brilliant initiatives, were able to shield our country from the devastation of inflation. Now, inflation has plagued the world, whereas in India, the core inflation and the retail inflation has come down to about 3 points. That is a victory in itself. According to laws within our country, the inflation range should be at 4 points, with 2 points deviation right or left. In the sense, it means that the government of India expects RBI to limit the inflation in our country between 6 points to 2 points. So, the government and the RBI have done a massive good job in making these arrangements. Now, firstly, let us understand banking. How does banking takes place? We have an institution called as the bank. Every bank has two types of customers. One are the creditors who invest in the bank in the methods of savings. People who open their accounts in bank in the name of savings accounts or current accounts are the creditors. They credit money into the bank. The next type of customers the bank deals with is the debitors or the loan. You might have heard about the loanings. People mostly receive calls on their cell saying that we have interest-free loan or a loan at a subpar interest rates. No, why do banks who store money are so interested in giving out loans? Though we have seen the fiasco created by Vijay Mallya, who defaulted a great deal of money to Indian banks. Even though such problems exist within the economy, why do banks lend money? See, firstly, say for example, all the individuals credited a bank with 100 rupees. Now, this 100 rupees will be kept in the bank. Now, what the next part will be, say a person needs to build a road, a person needs to build a house. There is another person who is into some real estate construction. Now, as we know, the individuals do not have sufficient amount of money to fulfill the financial requirements of such huge projects. So what the person or the company does is they ask for loans from the country. Now, what banks do is they collect collateral with sufficient collateral and with sufficient credit score and confidence in the applicant who is applying for the loan. The banks give away that money for their personal investments. Now, this process of banks for saving money and redistributing that money in the form of loans is essential for the economic development of our country. There is a simple rule: as long as money is still, it does not move within the economy, or where it gets hoarded, where there is concentration of wealth, economies tend to fail. The more amount of hands the money changes, that means, see, this person gets a loan to build a road. Now he will invest that 100 rupees for labor charges, construction material charges, etc. So there are forward and backward linkages to a person applying loan. So therefore money is exchanging a lot of hands. So when money goes around the hands of the people, it is a scenario for economic growth and development. So banks are essential for the economic growth and prosperity of the country. So this is basically how a banks work. It takes money from the creditors and it debits that money to the loanees, who will, upon completing their project, after the fixed period of time according to the agreement that they have with the bank, will repay it to the bank along with interest. Now, one thing I forgot to tell you, why people invest in bank. Firstly is because of security. It is simply not feasible to carry around a lot of money or to store a lot of money within the home. So in the search of security, we deposit money in the bank. And second is interest rates. All savings will have a certain amount of interest rate. Say the interest rate is 7% per annum. This year you deposit 100, the next year, given that you do not withdraw the money and this 100 is left with the bank itself, your money will become 107 rupees. This is because of interest rate. Similarly, the loans that are given out to individuals are also subjected to interest rates. Through the collection of interest and the principal, the banks survive in the economy, making a profit. Now, every institution in our country that has this mode of business, that is taking money from the people and giving it out as loans, is regulated by the Reserve Bank of India. In the sense, the RBI will closely monitor these financial institutions who are involved in the banking sector. Now, we have a lot of banks such as RBI, Punjab Bank, etc., who have a lot of customer base. Whereas RBI, no, you might have seen, there is no person in our country who has an account with RBI. There are banks that have account with RBI, and the only customer of RBI is the government of India. It is the banker to the government. It caters to the banking needs of the government. Now next, other roles of Reserve Bank of India. As I told you, monetary authority. That means the printing of currency, the type of currency, the denominations, everything is under the purview of the Reserve Bank of India, the issuer of currency. Every year or whenever it sees fit, the RBI calculates the amount of currency that is moving around in the economy. And if it feels that there should be an injection of cash, if it feels that there isn't sufficient amount of currency moving around in the country, they have the authority to create or print notes. If it feels that there is a too much amount of money circulating within the Indian economy, they also have the necessary required methods to pull that money from the inflated markets of the country. Now, it is also the custodian of foreign exchange. Say, for example, you have a import-export business. There is country X, you are a resident of country Y, and you have a import-export business. You export a certain commodity to country X. Now, X will not pay you in Indian national rupees because they do not have or they do not store Indian national rupees, whereas X will pay you in dollars. That is simply because the entire world accepts dollar as a stable currency and has faith in the American dollar. Therefore, it is dealt, the world trade goes on in dollars. So, now X will give you dollars, but you as an individual belonging to this country Y, you do not have a use for dollar. It is not accepted in your country. Your normal retail shopkeepers, they won't accept dollar. So here is when the RBI comes in. It is RBI who will exchange the dollar that you have received from country X in the according to the prevailing rates and give you the for our example, let's take rupees. So this dollar is again credited to the Reserve Bank of India. Now next, whenever there is a person, wherever you buy, there is an importer who buys a product from country X, this person will not be giving Indian national rupees. They will go to the RBI, deposit their Indian national rupees and get dollars in return, and this dollar will facilitate the trade between two countries. So it is the custodian of foreign exchange. Now RBI also, I told you, it is the major regulator of banks, and also it is its prime job is to control inflation within the country. There are various ways in which the banks go through this process. This I will be telling you in the next chapters. Now, as I told you, banker to the government. All the banking needs of the government of India are met by RBI. You must have heard about RuPay or Bhim Pay, Bhim UPI. These are the products of RBI. RBI is the facilitator for such platforms who involve in exchange of money, payments and settlements. If you want to transact your money from one person to another, the surety and the guarantee is with the RBI. So these are the various components of RBI and its job. In the next coming classes, we will understand how RBI plays a vital role in controlling inflation. You will study concepts such as CRR, capital reserve ratio. You will study about statutory liquidity ratio, and you will study about marginal standing facility. All of this will be taught to you in the next. Also repo rate, reverse repo rate, all the various ideals that are reserved for the RBI for controlling the inflation in our country. Thank you.